So, earlier during the week, Utusan Malaysia, they released a report stating that medical insurance premiums are expected to increase by 40 to 70% in price. And this is based on the multiple notices sent to policyholders from insurance companies. And the reasons for the price increase, number one, it's due to medical inflation. And this is split into three separate factors. Firstly, the rise in non-communicable diseases. And this is due to occupational health problems, our stress, our sedentary lifestyles, our bad eating choices, all of the oil in our food, etc. Basically blaming it on the consumer. Next is the increased utilization of health services. There's been higher demand for medical treatment because we are moving into an aging population. And finally, medical advancement. You would think that new technology and as well as advancements in technology will make things cheaper, right? But no, this is not the case apparently. The quality of healthcare, even though it has improved significantly, the costs are always increasing. And the response from the Rakyat, obviously the majority of the Rakyat is very frustrated. And everybody is asking, where's the proof that medical costs are increasing? If you're a private hospital slash insurance company, show us your balance sheet. Show us that you're not making any profits. Then only we can understand where are those price increases coming from, right? And some people are looking to cancel their policies entirely, which will lead to overcrowding public hospitals. And this is already happening. It's actually a hassle for the government to deal with this because not all of Malaysians are currently covered with insurance. And where do they look for healthcare? That's public hospitals. Feels like an annual event. Yeah, a lot of people related to this statement because there are many comments saying that their premiums have increased by 30 to 50% in last year, even though they have not made any claims in the past 8 to 10 years. Then there's another netizen saying that, oh, my policy is only 3 years old. There was already 35% hike last year. If it goes up by another 40 to 70% again, that would effectively make it double price, which is basically unsustainable for someone who is on a tight budget, especially for fresh grads, right? And this is very ridiculous. Yeah, the current Madani government, they have implemented progressive wage models, etc., increase income, and the goal is to have like a 5 to 10% salary increment every year. But what's the point of this if at the end of the day, medical inflation is like 40 to 70%, right? And this generation, we are hit with housing inflation, food inflation. Now we have to deal with medical inflation, especially when our wages have been stagnant for the past decade. If you followed the futurists for a long time, you know that we always talk about this, right? The average Malaysians have stayed stagnant, in fact, decreased slightly from 2014 to 2024. But meantime, you have private hospitals making record profits, which is quite weird. You should have expect them to at least struggle a bit because of the rising medical or healthcare costs, right? But this is not the case. KPJ Healthcare, they recently announced that they've achieved a historic revenue of 1.03 billion. Now they breached this 1 billion ringgit mark the first time during the third quarter this year. Their earnings hit 253.7 million. It actually grew 14% compared to last year. And in the same year, they declared dividend 4 times. And the fourth dividend amounted to 1.15 cents a share, totaling 50.2 million. Now we flip the page, we look at insurance companies, they are also making fat profits. Now for Prudential's case, their revenue came in at 5.07 billion, net profit came in at almost 1 billion ringgit, actually increased by almost 70% compared to the last year's net profit of 572.1 million. Then they also declared tons of dividends, right? In fact, twice a year, twice last year, once in May, once more in November, totaling 451 million ringgit. So I actually decided to dig deeper into how much they actually paid compared to their total revenue. So the total payout for 2023 amounted to 2.37 billion, which is about 47% of total revenue, mainly comprised of medical, critical illness, as well as death claims. So to put it another way, for every ringgit you contributed to Prudential last year, less than 50 cents actually go into paying for medical expenses. The remaining 50 cents or so, right, goes into paying for their salaries, the salaries of insurance agents, as well as, like you see just now, like declaring record dividends, even though the dividend is slightly lesser than last year's 2022's payout of 535 million. And this begs the ultimate question, right? Why are insurance plans, insurance premiums going up in price if these companies are making a fat profit? Well, the answer is pretty simple. They are private companies, and even though they are public companies, they're listed companies, at the end of the day, they answer to shareholders. They're not selling you insurance, they're not providing you healthcare because it's a public service. They're doing it mainly for the profit. And the side effect of it is a public service, which is why it is paramount for the government to intervene, to step in and say that, oh, insurance companies cannot do this, they cannot inflate prices unrealistically. And fortunately, an MP recently raised this up to Bank Negara Malaysia, and the central bank has released a statement that now requires all of the insurance companies to review their current repricing strategies for more reasonable implementation. Also, they must ensure that the options are meaningful and support those affected by the repricing. Basically, slightly more regulation. Now, all of this seems nice on the surface, but exactly how this will be implemented, exactly how this will be enforced, whether there will be any repercussions or not, yeah, that one I'm not too sure, okay, but it's definitely a step in the right direction now, okay. Bank Negara Malaysia is noticing this. They've also transitioned to provide an option for co-payment, right? That one is a bit of a controversial thing, like some people say that it's not helping with medical costs. Some people are saying that, oh, actually it helps lower medical costs, but yeah, so far I don't think it's working out, especially when we look at, medical premiums are expected to increase by 40 to 70% next year, right? So, but despite this, I don't think insurance is a scam. Okay, some of you may think it's a scam. Hear me out first lah. Insurance, they often have discounts with private hospitals. Okay, you ever wondered why the first question that doctors and nurses ask you when you enter a hospital is whether you have coverage or not? Well, that's because they want to understand what's your total coverage, right? And they want to maximize it as much as possible, but at the same time ensure that you pay as little as possible lah. And these insurance companies, they tend to negotiate very good deals with a lot of different types of private hospitals. So at the end of the day, your bill comes in if you are covered lah. It will be slightly, if not significantly lesser than compared to you paying yourself out of your own pocket. And another way to think of it is it's sort of like a disaster fund that you hope you will never touch. Okay, it's for saving. You have to commit to it every month. And also can relate to EPF, right? Because EPF is also some sort of forced saving. At the end of the day, it's for your retirement. But in this case, insurance, when we're talking about medical premiums, it's a disaster fund that you hope you will never use. So yeah, better to have it and not need it rather than need it and not have it. Yeah, that's my mantra when it comes to insurance. So what can we as consumers do? Well, the first thing is to ensure that you only buy what you need. Understand your plans in and out. Don't let your agents trick you. Okay. So according to Ringgit Plus founder Han Liu, the issue here is that medical insurance policies, they tend to be bundled with investment plans. So the costs become very confusing, very obfuscated. You don't really understand what you're really covered on and what's linked to the investment plan. So tonight after this session, for those of you guys who are currently covered, make sure you contact your agent. Understand really what's the breakdown of your monthly costs. Because for a decent T10 level coverage, considering you're 30 to 40 years old, you can get this sort of you can get a decent insurance plan at only 100 to 150 ringgit per month. No deductibles. In both nominal and triple P standards, that's actually pretty affordable. And some of those insurances, right, they can go as low as 50 ringgit per month cashless. And if you're looking for options, fortunately, Han has replied to my post on Twitter. These options include medical cards from Generali, Tune, Etika, Etaridi, and they range from 45 to 60 ringgit a month. So you guys can go and check it out. And at the end of the day, make sure you do your own research, contact your agent to really understand the breakdown of the costs involved. But if you're considering to terminate, and especially if you are in it for the previous 8 to 10 years already, then you got to think twice, right? Because that will lead to policy lapse. All of the premiums that you've paid previously, net profit to the insurance company. So maybe you might want to take out the investment link plan within your insurance and then stay with the current plan. Or perhaps you switch to a different plan within your current company. If you completely switch, terminate, and then go to a different company, right? Yeah, then your insurance company is definitely going to keep it as a net profit because there's no more risk liabilities, right? So make sure you think twice or perhaps thrice if you're considering to terminate. So first question is the insurance premium increased data sourced from only conventional insurance? What about Takafu health insurance? Might be worth to change if the premium hike is too unbearable. So unfortunately, this is for both conventional as well as Takafu health insurance. I just looked it up online. Apparently, Takafu is also hiking their prices, and that is due to the factors which I covered in the presentation earlier: rise in medical costs, the rise in non-communicable diseases, advancement in medical healthcare, right, and as well as the aging population, right? So you can check out this article and also really understand where does the price increase mainly come from. And a lot of the price increases, especially for private insurance companies, it mainly stems from them wanting to keep their net profits high. Okay, like what I discussed earlier, for Prudential's case, yeah, their net profit, in order to sustain this, right, they need to always increase their prices and also address the rising medical costs as well, right? So on the one hand, you have medical inflation. On the other hand, you have companies that are greedy and want to ensure that they make profits every year. That basically leads to your medical premiums increasing by 40 to 70% in price in 1 year, basically. Okay, so yeah, it's quite unfortunate, quite sad. I think there's a confusion between net profits when the policy lapses, as there's a technical difference between conventional and Takafu. Yes, they are. Takafu is based on the Tabaru fund. What are the effective ways to make that fund sustainable and ultimately lower down the contribution? This is actually a fantastic question, and I actually don't know how to answer this. I have to ask my advisors, and I will get back to you on this question now. What should we consider, especially to lower down our premiums? Yeah, I talked about this extensively just now. Number one, you talk to your agent first, right? You understand totally, completely what you're being covered on and what you need, and whether the agent is actually asking you to subscribe to things that you don't need or not. A lot of policies these days, right? Agents, they want to ask you to bundle it with an investment linked plan. And they tell you that, oh, when you're age 70, you can get this amount of money back. But when you do the math yourself, right, you will understand that all these investment linked plans they don't even keep track of inflation. Yeah, their yearly return is only about 1 to 2 or maybe even 3% every year. Right? Then they give you a life insurance or perhaps a bit of medical insurance, they bundle it together. Then that adds up to a lot to your monthly costs. So double check with your agent. Yeah? Make sure the first most important thing, it's not really linked to investment. If it is linked to investment, then at least understand how much yield it is generating. Yeah? If it's generating like 5, 6, 7%, giving you 5, 6, 7% returns, and then you can get it by the age of like 50 or maybe even 70, right? Then that's a different thing, that's good. But if it's not a healthy return, doesn't even keep track of inflation, you might as well use that extra money to put it into EPF or even invest in the stock market or whatnot, right? As a student currently studying, how will the rising insurance prices impact us in the future? If starting salaries improve significantly compared to 2024, will they be enough to keep up with the increase in insurance costs? Second question, are there any policy changes or government interventions that could combat against medical inflation and insurance company greed? Okay, so to address your first question, well, rising insurance prices, the first most obvious impact is that your budget will be squeezed, right? A 40 to 70% increment is a substantial amount. Your insurance will hike from like 153 ringgit to suddenly 200 to even 250 ringgit, right? Almost double the price, right? And at the end of the day, you previously had like 100 to 200 ringgit to spare, but now it has to go into paying your medical premiums every month, right? Which really squeezes your budget and limits your purchasing power lah. Okay, so that's the first, I would say, a very negative impact. And even though the starting salaries improve significantly, right, there's no way we can have like a 30 to 40% increment. In the real world, it doesn't happen, right? The Madani government, sure, they're doing a good job in ensuring, where's the slide? I think it's right here, right? The Madani government, sure, they're doing a good job in ensuring that we go by the progressive wage model, target like a 5 to 10% increment every year. But if these companies are allowed to profiteer off customers without any government intervention, right, then no matter how much your wages rise, it won't keep track of medical inflation. Quote unquote medical inflation, as what I've said just now. Number one, rising medical costs. Number two, due to companies want to keep their balance sheets healthy in order to satisfy their shareholders. Right? So this is the reality of insurance now. Okay, many people will say it's a scam, but like what I said just now, I don't think it's a scam, even though it's very corrupted. Okay, So will they be enough to keep up with increase in insurance costs? Well, the government has to intervene. Okay. Fortunately, Bank Negara Malaysia, they have enacted, I'm not so sure whether it's a policy or not. They have tried to request for insurance companies to disclose why they are doing this, review their repricing strategies, make it a staggering stage. Don't suddenly increment 40 to 70%. Maybe do like a 10% increment. It's still very high, it's still substantial, but try and make it step by step. Okay, and then ensure that these options provide a different type of option. If you want to reprice, increase your medical insurance premium by 40 to 70%, then give customers a different option to subscribe to. Ask them to downgrade or maybe even slash out the investment link plan or whatnot, right? Otherwise, it's basically just profiteering off customers, right? So yeah, hopefully Bank Negara Malaysia, they stick to this and they enforce this. So, are there any policy changes or government interventions? Like what I said just now, Bank Negara Malaysia, they've issued a press statement. Not entirely sure what they'll do about it. Okay, it's all sounds very nice right now, but there are no clear repercussions, no clear actions on how they will enforce whatever they mention in this statement, which you guys can look up and read it online. Would it be wise for fresh grad to spend a few hundred on insurance, or is it low priority, since young people are generally considered healthier or low risk? So this is the thing to consider, right? Regardless whether you're old or whether you're young, I think everyone will need a medical coverage. Medical insurance is a must at least. You never know, someday, touch wood lah, this person gets dengue, right? And dengue treatment in hospital right now is not cheap, you know. Sometimes it can even go up to 5 digits, right? Just to stay in the hospital itself one day is like what, 400-500 ringgit already in some private hospitals. So like what I said just now, better to have it, not need it, rather than need it, not have it. And according to Han, you don't have to spend so much money. Right? For 30 to 40-year-old people, they only need to spend 100 to 150 ringgit. They can already get quite a decent level of coverage. And the options are right here, okay, which again, I will send to you guys. There's Takaful, there is like Etika, there's FWD, right? So you can go and check it out. So for fresh grads, definitely you want to ensure that your plan is the most basic. You get the most basic coverage, medical insurance, right, hospital, etc., etc. So to ensure that, you know, in the event there's a unfortunate event, at least the majority of your medical expenses they are covered. Okay, so yeah. So typically it's 100 to 150 ringgit. Try not to spend more than that. Or sometimes if you want to search for these options over here, it can even go as low as 45 to 60 ringgit. Okay, at the end of the day, spend 5 to 10 minutes, right? Do your research, read the policy of your current insurance plan or whatnot to really understand what you're being covered and what is basically the investment link plan. Shout out to all our gatherer members: CH, Andrew, Wendy, Alex, CC, Urshad, Caveman, Calvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Rizan, Hudson, Jeffrey, Lukman, Jack, YC, Arif, Haziq, Jindan, Adam, Ashley, Sean, Jason, Putra, Alvin, Jiachen, Aldrin, Chaiwei, Fahmi, Dima, Kim Yip, and Justin, as well as all of our learner members. All right, if there are no more questions, hope you guys learned something. Thank you so much for joining tonight's session. By the way, Thursday's session, which features Han Liu, I am pretty sure one of the topics that he will cover is regarding insurance. I will also ask him to specifically cater like a 10 to 15-minute session, because this session is only 1 hour long, to talk about insurance and how you can actually buy the correct insurance for yourself. Okay, so for patrons of the Futurists, if you're a patron, don't need to worry. I will send the link to you guys in the WhatsApp group on Monday, tomorrow. Hope you guys learn something. Bye, guys. Good night. Stay safe.